Well, let's get some more perspective now from David Scott, who is both an entrepreneur and founder of The Logic, which covers Canada's tech sector. Nice to have you with us.
Great to be with you.
So this obviously has long been a sensitive issue for Canada, generally speaking. Can we grow businesses globally? But given how quickly tech scales, it seems like an enormous issue in front of us right now.
Well, you're absolutely right that it's something that we've been talking about for generations. You know, think of GM and branch plant economy of auto sector all through the years. This is really no different. I think the difference with generative AI in particular is that there really are only a few companies that have the processing power or the pricing mechanism to be able to build this type of work. So, you know, really you are talking about Microsoft, Alphabet, and maybe a few others, not to mention maybe China geopolitical aspects of this. But it's too expensive right now. And as long as Moore's Law hasn't kicked in yet on the price of processing for generative AI, it's going to be very difficult for Canadian entrants to really own the space.
The fact that we had all this AI talent, Dave, going back a few years, right? You'd hear about all this incredible work done at institutions like the University of Toronto. Was there not an opportunity for Canada to be, more part of this conversation that's happening on a daily basis?
Well, some of those called the godfathers of AI, maybe Jeffrey Hinton, Yoshua Bengio, many of them were working for those large tech companies, right? You know, Google Brain was a big part of Google's Canadian operations, and Jeffrey Hinton was huge there. But these places still, like Vector Institute, they still are very prominent here. And I think what's interesting is the students of those godfathers have now gone off and spun off their own thing. So if you think of Cohere, Aidan Gomez, right? Aidan Gomez came out of Jeffrey Hinton's lab in Toronto. So there is still a next generation of young entrepreneurs that are now trying to get into that. I think what's needed is more capital, and that's a larger question than if we have the talent.
Well, let's put with capital conversation. Is there a conversation around AI, how it's going to influence our lives, that's coming out of Ottawa? It's interesting. You've got the leader of OpenAI, which created ChatGPT, who does a lot of interviews in which he talks about the need for almost like a UN-style global discussion on all these big issues, disruption of the workforce, safety issues. So I'm hearing it from the private company at the center of this big AI revolution. You hear less about it, though, from, let's say, the federal government on a daily basis.
It's so interesting because you had Alphabet and Google CEO just last night on 60 Minutes talk about how they also agree that we need to slow this down. Then you had this letter that was signed by many asking for a 6-month pause on AI research. The challenge is, you're right, it is a regulatory framework challenge because we have geopolitical concerns here. If you were to pause the research and if you were to pause the commercial aspects of it, well, is China going to pause? Is Russia going to pause? And that's where we are right now. So in terms of government and what they can do, I think they have to get ahead of this a little bit, and that's why you're asking for these leaders. But keep in mind as well that we are talking about tech platforms that in the past have always wanted a kind of laissez-faire approach, more of a libertarian approach on regulation. This time it seems like they may have learned from their mistakes, and they understand, and their shareholders understand, that they need guardrails, or else we could have, just like Oppenheimer used to warn, some serious risks associated with this technology.
And I guess the flip side for our country as well is if we're going to say halt or no, what is our plan? I think of, the Google plan for a digital city in Toronto, which there were a lot of people concerned what that would mean, this private company indirectly or directly with access to data. But now that the company Sidewalk Labs has pushed away, is there a missed opportunity for, hey, can we put more technology to work and build more interesting things in our country?
There are 3 things that you really need for startups to grow or for sectors to grow: talent, scale, and investment. We always suffer from the scale problem in Canada. It's why you see Nuve, being a global company, or Shopify expanding to be a global company. But we could have more investment and risk-taking at the federal government level, right? And I would argue that with generative AI, you're also dealing with military questions. And I think that's where you may see more investment, and you're starting to hear more people talk about where's the defense industry going to go with this type of technology.
That's a big question, too. And I guess, the possibility that we wake up one day and just like Netflix now has this big presence here and we didn't really have a chance to even think about the ramifications of it. Are we, do you think, potentially in a situation, even with some of those younger students of Godfathers starting their own thing, that we're going to be sort of swimming in these big tech companies with all this dominant AI in 5 or 6 years and not quite sure how to navigate it?
One of the interesting things about this technology is it's kind of the base layer, and then you build your apps on top of it, right? And so you're seeing a lot of companies build out these apps. So I think there's a huge opportunity for Canadian firms, as long as they retain their intellectual property and really, protect their own identity, they can build on top of these larger technologies, which, as I said at the beginning, are just too expensive right now for startup players to really go into.
So at least being part of this growing ecosystem.
That's right.
Yeah. David, thanks very much. Good to have you with us.
Always. Thank you.
David Skok, founder and CEO of The Logic, joining us.
A short seller has published a new report questioning Canadian payments firm Nuve. Spruce Point Capital Management alleges Nuve hasn't been transparent about corporate strategy and its recent deal with Ryan Reynolds. Nuve's CEO, Philip Fair, responded to the allegations on BNN Bloomberg.
You have promoters and detractors, and we respect both of their positions. We're really fortunate and really excited about our partnership with Ryan. We have not disclosed specifically the terms of that partnership, but we're really excited not on where the business is right now, but what we can do with the business again over the next 5 years. Nuve had this blank canvas, a story that remained relatively unknown even at our current size, and we're really excited about taking that story and enhancing the brand awareness so that we can compete further and in greater depth in all the markets that we operate in.
We also spoke with Ryan Reynolds himself. One thing that was discussed was the relationship between the acting world and the business world.
You can draw, I think, a pretty clear string between the experience that I had in show business and the experience that I had in a lot of these businesses. And I think that when you're storytelling and hacking culture with speed, constraint is your friend. And typically when you're talking about marketing and you're introducing something that's slightly unorthodox or something that is not as easily digested as, say, a movie to an audience, those are constraints, and those force you to think outside the box. And those are incredible creative exercises. And it's something that I've been really fortunate enough to play in a lot of different sandboxes, and it's something I'm super excited about with these guys. I mean, if there's one thing I've learned in 35 years of storytelling and show business, is that you bet on good and smart people, and Phil and the team at Nuve are exactly those virtues. So.
There's also talk about the role that social media can play and how it can be both a positive and a negative.
They all have sort of different footprints. I mean, Twitter is now and has always been a piping hot dumpster fire of trash, and it can be a very difficult place, but it's also a place that there can also be incredible good. I mean, there's so many aspects of Twitter that can be so much fun and so interesting, I think, when handled right. And it's a great platform for messaging, I think. And then Instagram and TikTok and all these, they all have sort of a different vibe and flavor, if I guess. But I'm not an expert on that. I don't think of it through some sort of critical lens, like you might guess. I really don't. I was late to social media. I mean, so clearly I wasn't on the tip of the spear there.
But he sure is good at it. Reynolds was also asked if he had any advice for entrepreneurs or lessons he had learned from being an investor.
I talk to a lot of CMOs and I talk to a lot of CEOs, and one of the things that comes up, one thing that comes up, I think, more often than not is, people look at these long-term 8-month, 9-month strategies in terms of marketing and messaging, and overthinking things can sometimes be your biggest stumbling block. But I also look at people who are in similar positions to me, who have navigated some sort of weird waters and interesting waters, I think, in a decent way. And there is no right answer with any of this stuff. If I'm going to give advice to entrepreneurs, I don't know exactly what that would be. Everyone sort of talks about there's a prescription and a roadmap to here. I'm very, very lucky to have an incredible team around me at Maximum Effort: George, Dewey, James, Tony, some of the smartest minds in marketing and some of the smartest minds in business. And I'm learning as well as I go. And I don't ever profess to be an expert in anything, but I love the storytelling component. And so much of that is applicable to marketing.
All right, we are tracking shares of Netflix right now. They are trading lower. Investors are parsing through what was lackluster subscriber growth against expectations. Their forecast for sales and profit were also a little bit of a letdown. However, there were some glimmers of hope. As we know, especially in Canada, Netflix has been cracking down on password sharing. And in Canada, they are seeing both paid subscribers and revenue growth. They're optimistic that when it's implemented worldwide, that trend will hold. Let's bring in Eric Jackson, who is with us. There's a bull-bear debate right now on Netflix. I mentioned that UBS upgraded the stock on weakness. There's those that see a quarter that missed, and there's those that see kind of, the clouds are parting for Netflix, and it's delivering on some of its long promises.
Yeah, and I kind of sort of fall in between. I don't own it. I see it as sort of like being stuck range bound for the rest of the year, probably, because I see arguments on both sides. But you're right, though. The last night, what was good about the report was it's clear they're the leader in streaming worldwide, and so that means that they're going to be around. They're best positioned of any of the streamers that are out there. But there's just a lot of open questions still. So the Canada, story, it's sort of unusual for Canada to play such an important role in their earnings report. But
we just became sort of a little experimental market for them.
Right. So a lot of U.S. investors were thinking that they were going to see major cancellations from the password sharing, and that hurt Canadian growth. But Netflix said that didn't happen, which was good, but they didn't give a lot of details.
They said paid membership in Canada is now larger than prior to the Q1 password sharing rollout. So I guess that was the concern. Are you going to lose people?
Right. But I'm sure investors would have liked to hear a little bit more than just that, like exactly how many were new, what kind of plans did they sign up? We just don't know about that.
I wonder, though, is Netflix kind of having an Amazon moment in terms of its business model? Amazon kind of losing money. What was it? The joke was the world's largest nonprofit, and then one day they just kind of flipped the switch. And I see that kind of happening with Netflix free cash flow. Free cash flow burning, and now we're talking about more than $1 billion. We're forecasted $3.5 billion, then $5 billion in free cash flow. Does that, that could go to buybacks, that could go to a lot of stuff.
They've cut down on the silly spending on content, basically, and that were leading to like dozens and dozens of just like forgettable shows and movies that you never saw the light of day almost. And so that's good, and the free cash flow definitely was a positive part of the story last night. But are they going to keep cutting on content? I mean, there's only so much that they can cut there. And so I think really the growth story for a lot of investors with Netflix are things like, are we really going to see a pickup in international subs worldwide? Is the ad tier really going to result in meaningful new amounts of revenue pouring in? Are things like gaming going to be a major, needle mover for this stock? And so I think they could be, but I just think that those are all longer term stories. So.
Okay, speaking of questions, there's a lot of questions about price cuts when it comes to Tesla.
Right.
And there are two camps. They're cutting prices because they can, and it will stoke demand. They've got the margin buffer zone that, say, a Ford doesn't, or they're cutting prices because demand is falling off a cliff, and they need to do whatever they can to entice customers, basically. Are you somewhere in the middle again?
No, I'm bullish on Tesla.
Okay.
And so here's why. I think like there are always so many metrics we can focus on with different companies. And with Netflix and Tesla, I think the two key metrics are paid subs for Netflix or deliveries for Tesla. Yeah. And so people can, talk about what's happening with ARPU with Netflix, just like they talk about the bears on Tesla are saying the gross margins are going to be under assault because of these price cuts that Elon, it's the sixth in 6 months or whatever the number is. I don't care so much about that as a shareholder because I just want to get Tesla cars in people's driveways because then we can upsell them on full self-driving and other things. You just want someone to have that experience so that they become hopefully a lifetime customer, or they get the new cars down the road and so forth. So to me, I think that's the most important. And they had record Q1 deliveries, I think. So when the dust settles from the earnings later, I think people are going to want to hear what's the story in deliveries for the rest of the year.
Is Elon Musk becoming a more controversial character risk for Tesla?
Hard to say. I mean, I mean, it created an opportunity at the end of December. If you bought Tesla at $100 a share, obviously, I think all those fears were just overdone about, has he lost his mind? Is he distracted by Twitter and all this kind of stuff? And who's minding the shop at Tesla? You know, we sort of saw him respond to that with, you know, he had an investor day a few weeks ago where he sort of brought out 22 people onto the stage to show that it's not just him as sort of the Wizard of Oz behind the curtain running this company. So I think that's talk is more of a sideshow. It's really all comes down to deliveries, new cars, what's happening with the with this supposed kind of low-end starter car, sort of like the Tesla's answer to like the Golf or something like that. You know, I think that will really get people excited if and when that gets announced later this year.
Okay, the control room just made me feel so unqualified to talk about this next story because I called him the Drake. Obviously, it's Drake and The Weeknd. And there was a song that they did that went viral. Take a listen.
You know that it's gon' slap, hey, yeah, it's gon' slap, hey, time run it back. Talking to a diva, yeah, she on my nerves. She think that I need her.
Now that song is called Heart on My Sleeve and sounds like the Drake and Weeknd collaborated on it, but they didn't. It was entirely generated by artificial intelligence. And before it could be pulled down on a whole host of platforms, it racked up more than 11 million views across several videos in just a few short days. And on Spotify, before it was pulled down, it was streamed over hundreds of thousands of times. The legal implications of this are huge. Where are the laws, and are they up to date enough to deal with the rapid explosion of artificial intelligence and its capability? Let's bring in music attorney Cassandra Spangler from Cassandra Spangler Law. Thanks so much for joining us, Cassandra. So you work in the music industry. We had Universal come out and say, you know, to anybody who's in AI, which side of this do you want to be? They embrace the technology, but do you want to be in the world of deep fakes and stealing from some of these artists? So it's kind of a tightrope, right? This is an industry that is trying to embrace AI, but not at the expense of copyright infringement. How are you thinking about it?
Correct. Yeah, it's an area that's developing very rapidly, and the laws haven't yet caught up with it. So it's going to be interesting to see what happens with court cases and updates to the statutes. But as of right now, it's sort of up in the air, and there's a variety of different legal issues that come into play with this. The one that you're hearing most in conversation are the copyright issues. And, you have the record companies and the RIAA, which is the Recording Industry Association of America, taking the position that these AI-generated works that are copying well-known artists are essentially what they call derivative works, which would be copyright infringement. And then you have the people on the AI side, which are claiming that, no, these are actually what they call fair use, which is sort of an exception to copyright rules where you're able to, in very limited situations, use something that is not yours, something that someone else owns the copyright to, without having to get a license from them. So that's sort of the main debate that's going on from a copyright perspective right now around these works.
And has this been tested in court in terms of which way the courts are leaning, whether it is derivative use or whether it is fair use?
As far as I'm aware, there have not yet been any court decisions on this, although I expect that that's going to change soon. I think you're going to start to see a lot of lawsuits being filed. And it'll be interesting to see what the courts decide on this and whether there are differences in different jurisdictions. Maybe a court in California finds one way, a court in New York finds another, a court in Canada might find a different way. So it'll be really interesting to see what the courts decide on this.
And ultimately, is that how you see this playing out, that this will be settled by case law, or is this an area that is screaming out for legislative law?
I think ultimately it will be both. I think probably you will start to see case law first, and then depending how that case law goes, you might see people lobbying for changes to the laws as well.
If your client, for example, is Drake and this has happened, what do you do as a lawyer? If you're somebody who is an artist and your work has been used in AI, has gone viral, and you get no material benefit from that, what can you do right now?
So I would say the first thing would be probably to immediately file a takedown claim, which is exactly what the record labels did here on all the platforms. But that can get, it's a little bit tricky because sometimes they remove it and then it immediately goes back up under a different name or a different account, which I think is what has been happening here with this song. But that would be the first step. And then the platforms would decide whether they feel the takedown is warranted. And then if so, they'll remove it, and the person who uploaded the song would have an opportunity to respond to that. And then it ultimately may go to court if there's a remaining dispute over it. You would also want to send a cease and desist letter, although I imagine it may be tricky to sort of track down where this AI-generated music is coming from. And then it raises interesting questions about who do you send a cease and desist letter to, or even if you're filing a lawsuit, who do you file the lawsuit against when the music is created by a machine? And obviously you can't sue a machine. So those are some of the issues that I think will start to arise. And, on top of the copyright issues, there are also name, image, and likeness issues here, because they are essentially copying a celebrity artist's voice and also using his name. And so you could potentially have liability there, and also even trademark liability, because you're using, in this case, Drake's name, and I'm assuming he has a trademark on that. And so you're using his name without his permission to promote music. So I think that there are a variety of different issues going on.
That's so fascinating. You can't sue a machine. How do you solve for that? Then do you go after the platforms like a Spotify, like a YouTube, for having those videos, which of course opens up this whole other can of worms because they have not wanted to be labeled as content platforms, right? They've been doing everything in their power to avoid that so that they're not liable for the things that appear on their sites.
Exactly. Yeah. And they do have some protections. There are some safe harbor laws for content providers like Spotify or YouTube, where if they follow these takedown procedures, then they're not liable for what's being uploaded onto their platforms. And they're kind of in a tough situation as well, because a lot of these companies also have AI projects that they're working on, and so they're in a tough spot where, do they take the position that these works should be removed from their platforms and that it is copyright infringement? And if so, what implications does that have for their own AI projects? Or do they take the position that it's fair use and then get into a heated battle with, the record labels and the stock photography companies, places that they spent years negotiating and working out deals with regarding takedown procedures and content, that could affect that as well.
Cassandra, thanks so much. A very fascinating and evolving area of the law. We appreciate your perspective. That's Cassandra Spangler, music attorney.
This is breaking economic news. Retail sales numbers for Canada have been released. The change in retail sales in February from January was a decline of 0.2%. That's a more modest decline than the economics community had expected. The expectation was for a decline of 0.6%. The actual number comes in at 0.2%, excluding automobiles, which of course are very big ticket items. We get a decline of 0.7%. versus an expectation of break even. So the takeaway is retail sales activity in the month of February weaker than expected, and also significantly weaker than the advances that we saw during the month of January, retail sales here in Canada. Let's take a look at the TSX Composite, where it finished the day yesterday, down by 0.25 percentage point. We told you that Shopify was the #1 decliner in terms of influence. For more on the week that was and a preview of big stories to watch next week, we're joined now by BNN Bloomberg's Paige Ellis. Good morning, Paige.
Good morning, Paul. The TSX basically flat for the week, so any really big move is quite noteworthy in that context. The big stories that we've been tracking this week, Paul mentioned one right at the top of the half hour, which is tech resources. We've also been following news in the grocery space and at Bellis Health. So let's go through all of those. We'll kick it off with tech resources, up about 5% over the last 5 trading sessions. Of course, as we've been reporting at length here at BNN Bloomberg, this battle, of course, is broken out between, on the one side, tech trying to split into 2 businesses, and on the other side, Glencore trying to buy the company. This week, a lot happened. We had the tech resources top shareholder, Norman Keevil, once again reiterating his opposition to Glencore's bid. Midweek, Glencore issued an open letter in which they claimed that Teck's management and board of directors refused to engage with Glencore and voiced that they, encouraged shareholders to vote against the split. And then most recently, politicians have started weighing in. So BC's premier pushing back against Glencore's takeover offer, casting doubt on Glencore's ability to meet the high ESG, which is environmental social governance standards that BC has. Next up is Metro. So Metro reported its quarterly results earlier this week. Sales were up, largely due to inflation. We also saw profit grow. Awkward time, Paul, to be a grocer, because on the one hand, of course, for shareholders, you want to tout your great earnings, your great results. On the other hand, if you do that a little bit too much, you could feed into that greedflation narrative. And we saw that play out with Metro's results. They took pains to highlight that their margins are actually down year to date. But it wasn't just Metro that was in the news in terms of the grocery giants. We also saw Loblaw come out with some news this week. Galen Weston stepping back from the sort of day-to-day operations. That has largely been met with approval, because many have said that it wasn't a good look to have a very wealthy scion of a billionaire Canadian family heading a company like Loblaw at a time when so many people are feeling a lot of pain in the grocery aisles. And finally, I want to bring up Bellis Health. So earlier this week, GSK revealed that it announced that it was buying Bellis for $2 billion US, a 103% premium to Bellis's closing price the day before that deal was announced. The goal, of course, is to capture Bellis's very promising cough drug. The stock up, let's see, year to date up 76%. On the back of the news, though, it was up about 100%. Really remarkable move. One
of the big stories of the week. We'll get more earnings reports next week. What's on deck?
Right. So here in Canada, not as much as in the United States. So in Canada, we're getting CN Rail on Monday, so they'll be kicking it off. We're also going to get Rogers, which will be noteworthy, of course, in the wake of the big moves happening there. And of course, Cameco is reporting next week. A lot of tech stocks south of the border. So Amazon, Alphabet, Microsoft, Meta, they're all reporting next week. We'll be watching those closely. There will also be, you mentioned tech. I've been talking about tech resources. There's a big vote next week. Next Wednesday is when that happens. Tech will be reporting its earnings, followed by the big AGM, where that vote will take place. In terms of data, we'll be getting jobless claims in the U.S. and GDP both here in Canada and south of the border. So lots of potentially market-moving news.
You're going to be busy next week.
Very much so.
Ellis.